Hello, hello. Good morning. Welcome to another ES Futures trading stream. Today is Tuesday, November 28th. It is 8:57 a.m. Eastern time in the US. All right. Let's go. Let's check what the market did yesterday. Uh, I was yesterday. I had something here, you know. This low we have non-excess in the from Wednesday profile with a clear excess on the upper side. On the upper side, the first time after a while, we will have some excess, and not just excess, but rejection of higher prices here because prices went higher and were rejected, very clearly were rejected. But over the weekend, we have inventory that is very long here, very long inventory here because saddle is down here. Most of this inventory is above saddle, which makes the inventory long. With Sunday trading below saddle, which makes the inventory short. So long, short. Right? Kind of like balance, but you can argue that we have some long and short here. The opening at the opening we have a counteraction to this inventory here. Having a counteraction, oh, the thing that I was watching here is if there was going to be a counteraction. Because if there were not, this clearly would be a weak day, a weak market. The market gave us a counteraction. Okay. Was tremendous amount of buying around this level. Market was bought twice, which makes this level is poor and weak at the same time because it was bought from here and lacks excess. Now, yesterday the same thing happened. It was bought from this level again and no excess. So this level now is exponentially weak. Right? Good odds the market is going to take this level soon, maybe today. That being said, okay, the next thing I see is that the short inventory is in weak hands. Notice where this prominent overnight POC is. Prominent, very prominent overnight POC, very prominent POC. This yesterday market sold from those levels, so there are still a lot of shorts there, and there's no excess here. Huh? The market did not challenge this level here. Did not get close to this area. Notice in the market, the volume profile, you have volume here. It just went, kind of down to the center. There's a lot here. I'm not paying attention to this day. This is just half of the day. It was very, very weak here. Okay, this is Friday, and there was a lot of buying here, weak buying, weak selling during this day. I think the market is dealing with that now, or was dealing with that yesterday. Now, let's check. Let's check now. Let's check the bigger time frames here. All right. Now the monthly has 1, 2, 3, 4, 5 months. I think if I can consider this a range now. One time framing, trending, the trend to the downside has ended. There's no more. I think there's the good odds that this is going to be a range. And we got this one here. With the next, if there is something here, we have only 2, 3 more days to go to close the month. The market is very high here, so there could be some pullback here, and the market may have something to the upside. If there is something to the upside, the next reference to monitor is 4600 before this 4633 up here. Okay. Below we have this one, which is 4423, but still, I think it's this 4400 here is more relevant than this one here. We'll see why the next charts. I have noticed this trend here, and I cannot avoid to notice. And this is just so too perfect here. Notice how many times has the market been bought from this level, and now the trend we have here is happening here again. This is just an observation, because what I'm more focused here is that the market has these two ranges here. There's a look below into, below this range into this range that fail here. And when the fail happens, the opposite side of this range is the destination, the potential destination, and the market has almost reached this one. This rally has all the signs of the short covering here. This is the daily, all right? These levels here are important to me, and this one as well. Because I have seen lots of volume, lots of activity around this area. It doesn't have to be necessarily because there is a bunch of buying or selling from these levels, but also because it has a lot of volume. There was a lot of volume here. What I can highlight from this daily chart is the multiple gaps that we have here. We got 1, 2, 3, 4 gaps to the other side. This one looked like a laggard buying here, and the same thing can be said maybe for this one as well. But the resolution of this range, these laggards were removed here, and then another leg happened. But there is no. I don't like this actually. Okay, I don't like this one. I could expect something like this happening in here as well. Coming back maybe towards this area, but this level here, the 4500, is extremely. There is a lot of volume around that area. If this level fails, not because it's not. I am highlighting. I have this on my chart not because it's a round number, but because of the activity that has happened. That had happened here. All the previous gaps in the upper side has been filled. You got a bunch of gaps. You got this one as well has been filled. Only part of this last gap remains, half, and this is not unusual also. It's very mechanical way to feel or to trade around this gap, kind of like almost exactly to the center of the gap, and then from that there's some profits taking or whatever, right? This is a very, can you see the B shape that you have here, that we have here? Markets just don't do B shapes. I consider And this is the fill sign. Okay? The gaps are the fill sign. Then the shape, you have a V shape to the upside. Then have a B shape here. I mean, my bad, P shape here. Characteristic of short covering. And there's another one building and another P shape on top of the previous one. Have seen that before. I have seen what happened after that. But the momentum is to the upside here. I'm not going to short the market. If I short, I'm going to be very careful because the market just has momentum to the upside. All the trends are to the upside. It's going higher, it's going higher, going higher. So what is the trade? The direction of the trade is to the upside. The direction of the trade is to the upside. It could be very risky, right? And that's another that is another part, right? The risk of this market in the long side is extremely high, but the trades to the upside. We have seen here that short inventory is in weak hands. Same goes to the long inventory. Very mechanical way. Weak level here, non-excess here, non-excess here, and now we have a gap, a tiny gap here, very tiny gap so far. Okay, if notice how this overnight has traded through this overnight inventory from what day was that? I guess it's Wednesday. Yeah, this is Wednesday morning, right? Or is it morning here? I think this inventory has been dealt with. There's no more, but these ones remain. This, this, and this one as well. Now the next thing, what's happening with volume? Notice how volume decreases here. Decreases. There's a significant increment relative to the previous day, or maybe to this one, but it still is very low. This was exceptionally low. This is Wednesday. This is this day. Exceptionally low. This might be higher than the previous, but it's very low. Very low here. Now, going to the current, to tonight inventory. What's happening in overnight trade here? There's still some buying and selling around zero. This low has been repaired. My bad. It's about to be repaired. I don't consider this loss repaired until it's traded during regular trading hours, and that is because of the volume. Okay, the overnight doesn't have enough volume to repair these lows here. Now, if the market opens here, right now, 44 53, and we have a rally, for example, right? The market closes this gap and then it doesn't trade lower than this. I will still consider this being a weak low. I mean, technically would be good, but I think there's lots of stops below this if this remains here. Now, the next thing, what I see here, let me see if I can pull this out. Okay, I got it here. This Wednesday is a breakout. We have 4-day range here, a breakout here, then an inside bar. Let's go with the breakout of the inside bar. There was a breakout with the inside bar, and not just from the inside bar, but also from the 2-day range here. But this breakout fails. Okay, when the market closes back inside this 2-day range, the breakout fails. But that's the first step. I cannot say yet that the breakout has failed, because the first one was the breakout of this inside day here. a breakout inside A, and the market yesterday closed above. It didn't trade inside the range of this inside A. It traded above. So if I want to see a breakout failure, okay, a breakout failure. This is a breakout failure of this range. But what I am focusing now is, my focus is divided here. It can be this one, is divided between this breakout and this breakout here. Okay, downside continuation, we'll see the market getting inside this range. Inside this range. Coming back inside this range targets the opposite side of this range, with the ultimate destination being the opposite side of this 2-day range. That's the technical part of the trade. Okay. Now the context, this is a hyper-extended market to the upside. The month is about to end. We just have 2 more days in the month. The month is at the upper range. The market is at the upper side of the trading range, or the monthly trading range, and we can see. I don't know what's going to happen, right? But there can be upside. There can be upside continuation. I'm not going that there is going to be, but there can be upside continuation. Momentum is still behind the market. Everybody is talking about the end of the year rally. Santa Claus rally is coming soon as well. Everything is fine. Nothing can go wrong here. Sometimes this rally is the fuel of this rally. I have started to see some sign of exhaustions here of this significant rally here. But it ends, momentum ends when it ends. There's nothing there that will tell me in advance, there is no more momentum here. Now let's switch to the downside. And usually what happens is traders just get accustomed to this. The market gets complacent, gets used to something, and just after that we got sorry, I have to take this call. All right, I don't know where I was, but I'm sorry. But I had to take this call. I actually had something to do. Something has happened. I won't be able to be here for longer. Um, I don't know what I was talking. Oh, there was a lot of trade around settle. Now we have a gap here. There's no excess. This market may have just got too long here. I think what I can highlight from this range here, because now we have a 4-day range here, right? 1, 2, 3, 4-day range here, is that the excess here, the most important thing here, the excess they have here has not been, you know, has not been challenging, especially the volume we have here. Now, the next thing in the lower side, we have a big accumulation here around the 43, let's call it 40. Oh, look, I can call it this low here. But taking this low here targets actually this low, which is the opposite side of this range here. The most important thing here would be downside continuation here. The market is my main focus would be, I say would be because I am not going to be here, is what the market does with the gap. You know, the market opens with the gap. The trade is go with the gap here, right? If the gap is going to be filled, the filling happens just right away. And the thing is, this is not a significant gap here. If the gap market closes the gap here, you know, this opposite side becomes the destination trade, right? The potential destination of the trade is this opposite side. The market comes back inside this range, huh? But now, what happened with this one? So there's a lot of things that I have to see here going. You know, this is kind of trading is about change, right? Closing the gap will be changing something in the very short time frame, but opening below this low, you know, signals also change here. You know, the trend to the upside is over. Okay, all right. I'm sorry I cannot stay longer, but I will have to go. All right. I wish you guys good luck. Stay safe. Bye bye.